Diaspora remittances to Africa are expected to take a huge knock as a result of the coronavirus lockdowns that have put the brakes on global economic activity and the ability of expats to send money home. To discuss the current state of Africa's remittances sector, I am joined by Andrew Stewart, who is the Managing Director for Middle East and Africa at WorldRemit. Andrew, thanks so much for your time. Can you just paint the picture of what the state of remittances to Africa is currently looking like?
Yeah, good afternoon, and good afternoon to yourself and to the listeners. Thanks for having me. I think it's fair to say it's fairly early days. I think what we can share with you is there's certainly a behavioural change where the diaspora are looking at alternative options, be it specifically digital solutions. Given some of the government restrictions on movements, particularly in some of the key developed countries. So I think what we've seen is recently a significant shift to digital options, which obviously is something we offer today. So our customers, rather than now not having the ability to leave the house in the traditional sense of taking cash to an agent to send, they shift in to products like ourselves that they can start sending from the comfort from their home.
Of course, we do also have Sayjil Magan, the MD of Hello Paisa, who is in on this conversation. And Sayjil, just talk to me from your experience as a player in the sector. How have you seen these COVID-19 lockdowns impacting the industry?
Yes, thank you for this opportunity. The lockdown has certainly impacted the situation of people sending money home, sending groceries home. If you are aware of how Zimbabweans, especially normally would send their groceries home, is they would shop for groceries here in South Africa at our normal supermarkets. Thereafter, go to a bus station and give the groceries to a bus driver who would then take it over the border to their loved ones for them. However, with the lockdown, those borders are now closed, and these essential goods are no longer crossing the border. And that's the whole reason I'm here talking to you today, is to introduce you to our app called Malaicha.com, which allows Zimbabweans living in South Africa to shop on a mobile application, both Android and iOS, and be able to make payment here in South Africa and have those goods delivered to the doorsteps of their loved ones in Zimbabwe simply by using a mobile application.
But then where do you guys get the goods from?
So how the business operates, or how the business model operates, is we import the goods from South Africa and we warehouse them in Zimbabwe. Obviously, we preempted the lockdowns that are now taking place and have made sure that we've got 3 to 4 months worth of stock already in Zimbabwe waiting to be distributed. So our stock already sits in Zimbabwe, and that is why we're able to get it to the end user on the very same day that the order is placed.
Right. Right. I imagine that the inventory there is full of a whole lot of non-perishable goods, because the likes of fruit and veg and stuff I don't think can last for 3 months. But just to bring you back in, Andrew, I mean, we've got the United Nations issuing a report today saying that it expects global hunger to increase as a result of lost revenues from things like tourism and also the fall in remittances. And I know that you just said that it's early days right now, but can you just, tell us in terms of the impact and volumes of the transactions that you used to process, pre-COVID-19 lockdowns and now post? And especially as not only are the diaspora finding it difficult to move around because of the lockdowns, some of them have lost their jobs or have had to take a pay cut as a result of the stress of the lockdowns on the companies they work for.
Yeah, and I said, as I said earlier, I think it's still quite early days. I think there's a few things to add or comment on that. One is I think we've seen a significant mix in what the diaspora, our customers, are sending to. So historically, in many markets, obviously cash pickup was the only alternative. And obviously, given some of the lockdowns occurring in Africa, getting cash or collecting cash is almost impossible. So what we've seen is, rather than sending money as a cash pickup, we are offering them alternatives such as sending to mobile money and sending to bank accounts. And obviously, with bank penetration or bank account penetration in Africa being low, focus for us as a digital player is really ensuring that the customer has an alternative, which is mainly in mobile money. And linked to that, given your point around as lockdown extends and disposable incomes are constrained, I think what we've seen is a slight shift to the average values that are sent in and possibly the frequencies that we typically see. But given we've been a digital player for about 10 years now, what digital has allowed customers to do is actually send smaller amounts more frequently or more often vis-a-vis cash, because obviously it's not often you want to take time off or can get off from work to go pay in at an agent. So typically cash transactions are less frequent, high in value. So again, what we've seen in recent weeks is a shift to mobile money, lower transactional values, and possibly in some cases less frequently. And I think linked to the point around constrained household incomes, we've also implemented a number of key initiatives across the continent. And I think two things to call out. One would be to support our customer is we've reduced our costs significantly and really focus on the digital options, so be it mobile money or bank. And in some cases, we've brought our costs down to a flat fee of 99 cents, regardless of the amount the customer sends. And I think we've also then worked with our key partners to expand presence in certain countries. So Zimbabwe is a good example. Despite mobile money being an offer, customers are still requesting cash as an option. So we've been lobbying with our partners and the central bank to ensure that it's deemed as an essential service. So, and obviously with the right precautions and safety measures and social distancing, customers can still collect cash in times of need.
Right, Andrew, I mean, you're talking about expansion now, and I know that this space has attracted a lot of interest from players wanting to tap into the growing revenues that we did see prior to this economic downturn brought forward by COVID-19. How will the crisis fundamentally change the landscape in the remittances industry? You're talking about expanding. I mean, do you see opportunities or more opportunities for that? I mean, opportunities for consolidating, particularly the smaller players who might not be able to process much smaller transactions at less costs?
I think the two things. One would be I do think there's an opportunity because this is a real critical moment in our industry, and I think it's remittance today is still predominantly offline, and obviously the fastest growing part of that industry is online. So I think this is really going to be a tipping point for when consumers start adopting digital solutions. So I think that growth in itself will present a unique opportunity for players like ourselves. And I think to your point around consolidation, yes, I think given the stress in the industry, I think there will be a period of consolidation, mainly on individuals. My belief would be those offering bricks and mortar offline services. And if there's any further continuation of extension of lockdowns, I think it's going to be very difficult for that segment to pull through. So I think really the key thing is consumer behavior change in opting for digital. And then my point around expansion is fundamentally is ensuring our customers have an option that's beyond physical, i.e. the cash option. So ensuring that we can send money directly to a digital solution, be it mobile or bank.
And Sayjil, just to final comments from you, just around how the coronavirus will shape your industry. I mean, yours is an innovation as a result of this lockdown. I mean, post lockdown, what happens to players like Hello Paisa when those buses, and I know exactly what you're talking about, I've once been there, when those buses resume their activity, sending goods from South Africa to Zimbabwe?
Yeah, so Hello Paisa is traditionally a money remittance service as well. We've been in the remittance game for just a little over 5 years now, well established in that game. Malaysia.com, which is our goods remittance business, and to Andrew's point, is we need to expand, the products that we're giving our customers. So now it may move a little bit more away from traditional money remittances in the sense that a customer would go and pick up his cash from a physical location, but now be able to receive it in an e-wallet or in his bank account, or with Malaysia.com, he could receive it in the form of groceries. So Malaysia.com, we formed this business 11 months ago. Important to note that it was not as a result of COVID-19. This was a problem that has existed for many years for Zimbabweans living in South Africa and any other part of the world. We have been looking at sending groceries and essential items back to their loved ones. So from here, for Malaysia.com, it's onwards and upwards. There will always be this need unless all Zimbabweans migrate back into Zimbabwe, which I do not foresee happening in the foreseeable future. So yeah, we would continue operations as usual. And to Andrew's point, is what we would strive to do is to make sure that these goods are going across at the absolute lowest cost, and we ensure that by making sure we source goods and we source transport and other items at the lowest possible value, and pass that same saving onto our customers. So currently, you look at the prices that we have on our Malaysia.com app. It's akin to shopping in a South African supermarket, and we have not increased our pricing due to the weakening rand, even though we're importing these goods into Zimbabwe.